Today I'm going to highlight 5 takeaways from our latest OPE retail trends and analysis that will matter most for the industry as we move into 2026. In 2025, we didn't see the recession that many analysts predicted. GDP growth slowed slightly, but inflation stayed relatively contained, and the Fed delivered multiple rate cuts. Despite that, the housing market remained the biggest constraint in OPE demand. Home sales activity was the slowest we've seen since the Great Recession, which limited replacement and upgrade cycles for higher ticket equipment. Looking ahead to 2026, mortgage rates are expected to move to 3-year lows, which could finally unlock housing turnover. If that happens, categories with high ticket prices like riding mowers and ZTRs are likely to see the strongest rebound. If housing remains stalled, growth will likely continue to concentrate in lower ticket handheld products. The second takeaway is that consumers remain extremely value focused. In 2025, we actually saw average net prices in retail increase across most OPE categories. But despite those higher prices, consumers bought less expensive products overall, with APP down, particularly for higher ticket items like riders and ZTRs and snowblowers. Retailers responded by shifting their promotional strategies. Promotion frequency increased, but the depth of discounts actually declined. Instead of deep price cuts, retailers focused on more entry-level products and value-add bundles, things like free batteries or free tools with purchase. Premiumization alone isn't going to drive growth right now. In 2026, brands that protect entry price points and maintain strong good, better, best assortments are likely to be better positioned than other brands relying solely on high-end upgrades. The third takeaway is that cordless equipment has clearly become the default across most OPE categories. Across the Open Brand market share retail panel, cordless now accounts for about 62% of total unit share. The dominance is strongest in handheld equipment like leaf blowers and line trimmers, where cordless share is already above 70%. However, adoption is starting to mature, which means growth is slowing. Gas equipment still dominates high power categories like riders and ZTRs, and walk-behind mowers are about 50-50 with a nearly even split between gas and cordless. So the next phase of competition isn't about convincing consumers to go cordless, it's about performance. Runtime, power, and battery ecosystem compatibility are becoming the real differentiators. Takeaway number 4 is that marketplaces are having a growing impact on the entire industry. Online purchasing of OPE reached the highest level we've ever recorded in 2025, even surpassing the pandemic years. What's especially notable is that online purchasing is expanding into categories that were historically very store-driven. For example, residential riding and ZTR mowers saw the biggest increase in online purchasing year over year. We're seeing that promotional activity in the e-commerce channel is generating a lot of this change. Amazon captured the largest share of promotional activity, while Walmart led in discount depth in 2025. At the same time, a significant portion of OPE units sold online are priced below $100, which highlights how strongly entry-level products perform in the marketplace environment. For brands, this means marketplace strategy is no longer optional. Pricing visibility, seller management, and fulfillment capability are becoming central parts of OPE channel strategy. The final takeaway is that technology is starting to reshape the long-term competitive landscape. Battery ecosystems are becoming powerful lock-in mechanisms. Once consumers invest in a battery platform, they're far more likely to stay within that brand's ecosystem for additional tools. At the same time, we're seeing early growth in smart and connected equipment, with app integration and performance monitoring features becoming more common in premium models. And maybe most exciting, robotic mowing technology is advancing quickly. New products are entering the market with LiDAR navigation, wire-free installation, and improved obstacle detection. While adoption in the US has been slow so far, these improvements could push robotic mowers toward mainstream adoption over the next several years. So to summarize, the OPE market is stabilizing, but the next phase of growth will be shaped by several structural shifts. Housing conditions will determine the pace of demand recovery. Consumers remain value-focused. Cordless is now the default fuel type. Marketplaces are reshaping how OPE is sold. Emerging technologies, especially battery ecosystems and robotics, are creating new competitive dynamics. Taken together, these trends suggest that the industry is becoming less purely seasonal and more influenced by broader economic conditions, retail strategies, and technology innovation. Thanks for watching this 5 for 5. I hope you took away some valuable OPE insights from Open Brand.